always say, if you want to get a real read on the state of the hiring in the country, especially going into Friday's non-farm payroll report, you should check in with Paychex, P-A-Y-X, the country's #2 payroll processor, specializing in small and medium-sized businesses. I count myself as a client, which also has a growing human resources and benefits outsourcing business. This morning, Paychex reported a very strong quarter. The company delivering a 7-cent earnings beat off a 51-cent basis really got people to take a notice here. Higher than expected revenues rose 8% year over year, even as their full-year guidance remained unchanged. This is much better than I expected, especially since Paychex is still waiting for a rate hike to really unlock its earnings power, as they collect interest on the money that their clients pay them while they're waiting for you to cash your paycheck. Stock jumped $1.62 today. And even here, it still sports a 3.5% bountiful yield. So let's take a closer look with Marty Mucci, the president and CEO of Paychex. Hear more about the quarter and the pace of hiring in the country. Mr. Mucci, welcome back to Mad Money.
Thanks, Jim. Great to be here.
All right, Marty, it seems like two things went for you. First, business formation, definitely better. But second, per customer, you're getting a lot more out of them. Why?
Well, we're selling a lot more product. We have it in bundles, and we're selling a lot more product, offering a lot more product. And it was a great quarter on our HRS, our human service resource side of it, which was the HR outsourcing and our product that helps clients with the Affordable Care Act.
Well, I think that there's a great moment in the conference call today where you basically say the other guys, they give you a piece of paper when it comes to the Affordable Care Act. We actually tutor people how to do it. That's very true. How do you know what to do, and why are the other guys just giving a piece of paper?
Well, you know, Jim, we've been in the business for 45 years. We have over 70 people in our compliance department that watch every change going, and we've accelerated the growth in the operations team that are helping with the Affordable Care Act. So we're not only helping them fill out and file the forms at the end of the year when they have to be filed, but we have monthly alerts that are helping clients say, hey, if you hire that next person, is this going to impact you from the Affordable Care Act or not? We always provide a total package of innovation and service to our clients, not just make them do it themselves.
Well, let's talk about that, because the Affordable Care Act was the theme that ran through the conference call and through the news release. This turned out to be something that companies can't navigate by themselves, can they?
No, it's pretty tough. I mean, even when we take it, we have to get a lot of information from our clients. We have to help them set it up right. But once it's set up, we're able to really help them make the decisions, even on a month-to-month basis. And it's a very complex order that's come out with the Affordable Care Act, but we're there to help them with it.
Will that go away when everyone gets the hang of it, or is it really kind of just all new business that's going to be an annuity stream?
Well, I think sales are going to continue to pick up through the end of the year. You know, we're still providing this service. Some of our competitors have shut it down because they need time to set up the clients. We're still selling it. I think this will have good sales through the end of the year, and then it'll pick up again after March when everyone realizes that maybe they didn't do quite as much as they should have from a client perspective.
Okay. Now, we've been studying this professional enterprise business, PEO space. One of the companies that we've had on the air several times really did botch their predictions for medical costs, and it scared me about the whole industry, medical claims costs. How have you been able to not run onto those shoals? Because we were quite shocked. The company, I'm going to full disclosure, was TriNet, and they really did blow it.
Yeah. You know, we've learned, we've been in this business a long time, almost 20 years now, and the PEO business, and we decided you got to have great underwriting. And we separate the underwriting from the sales. We have a great sales team, but we have an even stronger underwriting team who make sure that the clients we bring in are solid from an insurance and a risk perspective, and we stay very close to those clients because we're also their human resource support as well. So we know when the client's making changes and we help them through it.
Okay, good, because I don't want to get blindsided again on that. Now, we have a mixed blessing here. We've got some small businesses. I watch you on Squawk. You've got some creation. At the same time, we're seeing big layoffs. We just saw Chesapeake. I know these are huge companies. Chesapeake, 15% layoff. Caterpillar doing a lot of layoffs. Where are we in the layoff hire business?
Well, in the small business sector, we're still seeing solid growth. You know, it's decreased a little bit from last year's peak, but we are definitely seeing 4 years of sustained higher employment growth in those companies under 50 employees than our base year of 2004 in our index. So, and the other good thing is we introduce new sectors now. We break down the job growth by sectors, and other services, which is discretionary spending, saw the biggest index. And we think that's good because that means people are spending money on things that are discretionary.
Well, I got to tell you, put it all together. I know a lot of these analysts who have been somewhat negative have been saying until they raise rates, these guys can't make money. I think that the growth you showed in that Human Resources says that you are a growth stock, and you're not going to just sit there and wait for the Fed to raise rates. Pretty true, right?
Yep, that's exactly true.
Well,
Thank
congratulations, Marty, on a great quarter. It's Marty Musi, President and CEO of Paychex, a stock we've been behind. Why? Conservative, well-run, with a good dividend. That's what you need in this kind of market. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.